Hello, viewers, and welcome back to our show on this Sunday, 26th March of 2023. So after the huge sell-off in the crude oil markets the previous week, this week closed with a gain of about $2 to close at $75 per barrel to the Brent. Minor recovery, but things may not be very linear from this point onwards, because this week has seen perhaps the longest or the strongest decline in the net long positioning data in terms of the speculative position on the long and short. So which tends to indicate that the market sentiments are very, very poor, and the ongoing banking crisis does not seem to have run its course. There seems to be a lot of things which are feared to be not very public or not very visible. There is fear that a larger contagion risk could still be upon us. And with the Fed hiking the rates by 25 basis points, so things are still in the tightening mode. For how long? Fed seems to suggest that it's going to maintain, but the markets are not so very sure. But coming back to what way the crude prices are likely to move, one way could be to look at the supply side of the situation with the loadings data, which tends to suggest very strong loadings. So the supply risk, which has been on the table for about more than a year, and especially since February, when Russia announced 500,000 barrels per day reduction in the production, that does not seem to have borne out. So supply sides remaining very, very strong. Demand side continues to look grim and likely to get further in decline. So we see this coming week to be under a continued selling pressure. So from the $75 to the Brent, we could again be touching $70 in this coming week. So that's our forecast for the crude oil for the Brent. And coming back to the bitumen India demands continues to be robust, although the supplies and the inventories have improved a bit. So this week could perhaps look like more of a steady prices, not much decline and no gains either. So that's it for this week from now. Thanks for joining.